right. Good day, traders. So, welcome to another edition of Wednesday Live. Promises to be very interesting. We're going to address a lot of concerns that many of us have as regards trading entry. Okay, but first and foremost, I want us to review what we said concerning DXY in our previous or last week weekly outlook that was sent on Monday. Okay, so it was recorded in that video that because of this push that we're going to have correction in DXY and push down, and exactly what DXY has delivered to us, exactly as forecasted. You see it, correction, it push down. That was what we said on DXY. And on euro dollar, it was specifically mentioned in the video that we are going to have a corrective structure right here and a push up to break this top. Exactly what euro dollar has delivered to us right here. And then euro AUD USD, it was also forecasted that market was at this level that time. If you watch the video very well, we said it, we made it very clear that this pair did not give us a sign of demand right here. So if there is no demand right here, we don't expect it to go to the moon. All right. We expect that everything you are seeing here is corrective structure. But at the same time, I also mentioned in that video, we're at this level. I mentioned at this video that even though you are seeing it bearish in a 15 minutes time frame, that you should not expect it to come down here. You should expect it to get here, make a correction, and make a move to the upside. Exactly what it has done. Okay, exactly what it has done. If you watch that video, we're here. I said we are going to make a move right here, and then we'll make a move to the upside. And I think I caught this one. This was part of the trade I caught. I sent this one to my Signal channel. All right, and I think they all benefited from it. Okay, so I also made it clear in that video that we expect GBP JPY to make upside. And how did we see that it has to make upside? From, if you look at it from monthly, you see right, it's at the bottom right here. We expect it to push up at the monthly, weekly, you see it bullish. All right, bullish. But today I'm going to try to treat some of this setup very simple. It will be as if we want to do back testing, just going to be for a few minutes, but I believe that the lesson you learn from it is going to stick with you for a long time to come. Let's use, let's say, euro dollar for an example. Let me clear all some of the trades I've taken on it. So what you do is simple. All right. You can start from weekly. You are not doing any analysis on weekly. What you are doing on weekly is just to have a view of how the market is, buying or selling, and the position of the market at every point in time. So after this bearish move, guys, you see this move that rejected the low very clearly. Okay, once it rejected the low very clearly and it pushed up and came down right away to the same level, that becomes the right level for us to buy. So you will see this formation and how the candles are moving. You will see it clearly on weekly time frame. But when you get to daily time frame, you are moving closer to where you could get your entry. Of course, you know how we analyze the trend. Okay, how we analyze the trend: break structure, upside, break structure. This one does not break this top. So right here, the trend is not complete. So you have a swing between this level and this level. All right, you have a swing between this level and this level. So if that is the case, what will happen is this: everything that is happening here is considered as a ranging market. You will be seeing this as you're having a pause inside, you're having correction inside, but honestly, it is a ranging market. Before a valid, long-term buy can happen, you must break this top. And before valid long-term sell will happen, you must break this bottom. All right. So it's as simple as that. So, but nevertheless, when you have this push to the downside that broke market structure, you have this retracement that come to where? That retracement has come to discount, a discounted level right here. Right here. I have to show you clearly. We don't rush. When I say live session, I don't like to rush. I don't rush things because it is to teach you and make you understand some basic things. So it's not to be rushed. Okay, it's not to be rushed at all. So this move to the downside is considered as an impulse. Why is it an impulse? Because as it's moving to the downside, it broke market structure. Okay, any impulsive move, any move that qualifies at all to be called an impulse must break a market structure. All right. So, and for us to continue to sell that pair, we must do what? We must wait for it to come to premium position. And premium is between 50 to 79 this way. All right. Remove your fib, you are done. And then within the premium position that we have identified, there is what is called an inducement. Okay. That's what is called an inducement. That's the last pullback that happened before the break of structure. That's an inducement. Look at your inducement here. Okay. So if you have your inducement there, let's go to 4 hours time frame. Ordinarily, for this low here to be a lower low and to be valid, this move to the upside is supposed to break this inducement. But if it doesn't break it, then, and it gets to that level, you can sell. Okay, because you are at premium position. Nobody is looking to buy here. Everybody is looking to sell. Nobody is looking to buy. So if that is the case, I want to show you how you catch this wave and catch this wave. That's what I want to show you essentially. All right. So now, since it has gotten to that level, but it has not broken it, fine. It wants to operate in a range. So you have to check if you are able to see an impulse, okay, to this level. Of course, you see move, correction, move, correction. So when you are here, many people make mistake. They are looking for sell already. No, the trend is still bullish right here, right here. It's still bullish, still bullish, because it could as well be pushing up this way to go and break the top that we had anticipated. Okay, so you are bearish only when you broke this level. But you know what? After you have broken that level, you are already very close. You are already very close to what? To another discount level from here to here. Can you see? This push to the upside, it has its own discount level. And this is its own discount level from 50 to this. So I have to prove to you here why most of the time counter trend, if you have to look at trades according to its principle, according to the principle you need to follow, you will now see why it is practically impossible to counter trend successfully. For instance, look at this move to the downside, broke structure only at this level. And the level to which it broke structure, okay, is already close to the discount where you are looking for buy. So where do you get your sell? So which means that any sell opportunity you get before this level in itself is invalid. It's invalid because you are, you are selling. You are selling at a position that you are close to the discount. That's what it means. Do you get it now? Because if you sell from here, good, truly you are at premium. You are premium, but you are counter trending because the trend is still bullish. Look at it, up, down, up, down, up, down. It could still go up as up, but it came right to this level. It is until you invalidate this level that we have a break of structure that we should be looking at, sell. But when we got this level, did we have a pullback for us to say no? And that is to tell you that this is purely an uptrend. And then when you look at this level this way, when you look at this way, and you're having your discount right here, okay, so what you will consider is simple. Now you have your discount on 4 hours. Then you also need to understand what is called an inducement. Okay, of course, many of you know how I take seriously Wednesday live session. Some of the things I teach my mentorship, some of the things I teach in my mentorship program, I teach them here occasionally. Okay, sometimes unconsciously, I throw everything down for you. Shortly, I may not be making Wednesday live session video available on YouTube. All right, it will just be a personal information to me. So whoever attend will benefit what is taught there. Okay, so there is concept of inducement. Okay, there's concept of inducement, which everybody should know. As you are moving to the upside, this is a pullback. This is an inducement. This is another one. This is an inducement. So on the line of impulse, you recognize the different inducements that you have. And then when you take a fib of this impulse, you now ask yourself, which inducement lies in the position of the discount? Look at the discount right here. Which inducement lies in the position of the discount? This first one is on 50%. It's on 50%. And what do we call it? An inducement that is on 50% retracement. You don't want to take it because you don't want to buy at equilibrium. You rather want to buy at a discounted level. But look at this inducement, guys. This inducement is lying at 70.5% of this move. So it is lying at the zone of discount. So that is the one you want pullback to come to. And until this pullback is coming to take this low, you are not going to have a valid buy opportunity. Somebody should hear me very clearly, because I know I'm talking to somebody. This is what is missing in your trading activities. You are buying at a level that you are not supposed to buy. Look at it here. This is inducement. The market has come, consolidated. I would love to see consolidation before inducement. Can you see? Market pull down, take this low. As soon as this low is taken, every manipulation is deemed to have been over. The market can no longer be rigged against you as soon as that inducement is taken. So once it's taken, what do? Right now, you need your entry. You can go back to 15 minutes time frame, and this is where you need to learn what is called break of market structure. And of course, for some of my students who are here, they will know that what qualifies this to be a liquidity grab is the speed with which it took that order from the induced level or inducement level, and the speed with which it ran out of it to break market structure. It's as simple as that, guys. So can you see? It came here with speed to take order from that level, and what did it do? It ran up back immediately to break market structure. This is what you need. For you to get your entry, you need to wait. That particular move that broke market structure need to come back. Okay, you need to come back to discount level for you. Boom. For that one, if it comes to 50%, you can take your trade, guys. You can take your trade because it's already on the move. This is your trade here. Boom. Stop loss just below 70. Boom, to the upside. This is how you catch this entry. All right. Somebody will say, okay, maybe this one is luck. This one is luck. This one is not based on any principle. It's based on luck. Let's check whether the next one will be based on luck too. Okay, so we've caught this one. Let's push it aside. Okay, now this one right here has broken market structure. Am I right? Yes. We are in an uptrend right now. Let's go to 1 hour, self. Let's go to 1 hour. Okay, market structure is broken. And what did I tell you? One of the essential elements of an impulse is its ability to be strong enough to break market structure. Once a push is strong enough to break a market structure and possibly leave an imbalance behind, then it's qualified to be called an impulse. Some of the time it may not leave imbalance behind, but it will leave inducement. Okay, there's a particular inducement that causes, that push to the upside. Why do we call this an inducement? This side is called an inducement because many people were looking forward to sell. Many people were looking forward to sell, and then the market did not sell. You rather make a move, a powerful move to the upside. Therefore, this is an inducement. Okay, so we have identified the break of market structure. We have identified inducement. Then what do we need? A critical, element of a retracement or correction is its ability to what? To break what? Inducement. Can you see? This market has come. It has retraced, consolidated, formed a liquidity pool here. Look at the speed with which it came and took the inducement away. Okay, inducement is taken, so this impulse is valid, this correction is valid. What do we need to see, guys? We need to see break of market structure and correction to get involved. Look at it here, break of market structure, correction. This one, you don't need it more than 50%. Get your entry, you get in, boom. Can you see? Simple. That is how you will have caught this move. Okay, somebody will say, what are we doing? If we are analyzing the market that has already happened, then how do we project the one that has not happened based on the same techniques? We can. Look at it here. Right here, there's a break of market structure. There is a strong push to the upside. Fine. So we can identify our inducement right now. Identify our inducement. Right now, you have inducement here. You have inducement here. Can you see? When inducement is close to each other, they create what is called liquidity pool. Okay? You can see, you could see when we were here, we only had one inducement in one location. So we're looking forward to breaking that particular inducement to have a move to the upside. But right now, we are having two inducements very close to each other. So I would like to connect the two inducements together this way. So I will not be involved in the buy of what do we call it, of Euro USD, except I have these two inducements taken to the upside. And how would that happen? You could have this coming this way, this way, this way, this way, this way, this way, to just come boom to the downside with a strong move, taking this inducement. And if you measure if this inducement is to be taken, then your impulse will be from this level to this level, because part of the inducement is part of that impulse. All right. So if you measure it that way, you can see clearly that you are having your discounted level right here, right here. So remove this. So if this move come this way, break this low, break this particular low, and immediately run up to the upside, creating a correction here, you don't need that to come to 61.8. You only need that to come to 50%. Boom. You have your entry to the upside. What's your target? Break this top. Because as long as there was break of market structure here, this impulse is valid. As long as there is, inducement is taken here, this correction is valid. So the next projection will be to break this top right here, to break this top. And then if you are a conservative trader, you can target exact high. If you are a greedy trader, you can target more. Okay, probably target the next sub-psychological level, 1.0150. So this is how you get your trade setup. This is how you get your trade setup. Okay, so in the course of the journey to the upside, you will see before it break market structure right here, you're going to see another inducement, and then and this break of market structure, you need this to come down. Okay, develop liquidity here, break down to the downside, take this inducement point, flash up to the upside, correct again, and make a move to the upside. This is how market operates. Okay, maybe somebody will say, we are just doing it on euro dollar. Can we do it on another pair and see how true it is? Of course, you have to start from higher time frame. You have to start from weekly, monthly to check the direction of the market. Let's do let's pick a random pair. Let's just pick this USD JPY. Let's pick USD JPY. Okay, USD JPY. Right now, there's a rejection from the upside and it's pushing to the downside. Okay, so let's go to this time frame. Okay, it's still developing. So what do we see? We see an impulse. And what did I say is the characteristic of an impulse? An impulse should have the ability to break market structure. Can you see? This is the lowest low. This market is broken to the downside. So this is an impulse, it's valid. We need to identify our correction, guys, by taking the fib of that impulse and recognizing the level of the discount. Okay, this is the discounted level right here. Okay, what is the next thing we need to check, guys? We need to check liquidity. Okay, we need to check inducement. So in a situation where you have no inducement, you can see in 1 hour time frame for USD JPY, you have no inducement. We're expecting a pullback that happen before the break of market structure. It does not happen. So if it does not happen like that, if you like, you can leave such setup. But if you like, you can take your fib and identify a premium zone. Okay, especially what I do, I take between 70 to 79 right here. If it doesn't come there, I'm not going to get involved. Okay, so what we are supposed to do in this case, like I did not get involved in this trade because it did not get to my right level. I projected this to be the liquidity that will come over here. Okay, and as soon as it come over here, what do? The liquidity, the inducement is taken, impulse is gotten, correction is valid. You just need to see a push down, a break of market structure, come back, and you take your trade to the downside. That is how you look at it. But right now, it did not get to where we want it to get to. Don't be surprised to see a move like this, okay, and coming back to the upside. Gravitate towards the right level that the market need to get to and creating a three-wave corrective structure in the process. Creating a three-wave corrective structure in the process. So when it gets to that level, we will be happy to note that our impulse is valid, our correction is valid, our liquidity is taken, our inducement is taken. We now see a little impulse correction and we're getting to the downside to break this low again. All right, so that's how you look at this. Let's look at gold, guys. Let's look at gold. Gold has been a very good instrument to trade. Let me show you. Let's go to daily, guys. That is where you start, or weekly. You are not doing any analysis on daily and weekly. You are only looking at the pattern where you are in the market. That is essentially what you have to do. Look at here. Okay, Of course, I've taught you in this channel how to analyze your trend. Okay, for this to be qualified as a lower low, this inducement must be taken, and it has been taken to the upside. So this is a lower low. Okay, this is a lower low. So we're expecting this to come to break this low, and since it did not break this low, it means we are coming back to take this top. That is what it means. That is what it means. When we are doing, a short webinar like this, it will be practically impossible to give you the details of how these things work. But don't worry, I'm packaging a course that is that you are going to stay on and understand these details right from beginning to the end, and how you logically, follow through your analysis and take your trade. Everything is simplified. I will soon release it for everybody to have access to it. Very cheap, very affordable, just to help people. All right, look at it at the low here. Do you see this low broken? No. If this low has been broken like this, we are not anticipating upside. That has become a break of market structure. We are looking for a pullback to break this, what do you call it, inducement, and come down again. That is how we are supposed to look at it if this low had been compromised. But right now, the low has not been compromised, and we are going back to take the top. Okay, most likely gold will take these two tops before coming down. All right, because this has become another level of inducement, because they are at the same level. So you have a lot of liquidity resting on top here, and markets must come to take it. And how will the market come to take this level if it does not buy? It must buy. Based on that, guys, we are not looking for a buy opportunity. And what do you see down here? You see a powerful engulfing candle. There's a powerful engulfing candle here, guys. So as soon as you see it, get ready for your setup based on the techniques I've taught you in the lower time frame. Look at it here. Look at it here. The market has come. Look at it this way. Boom. All right. And the market move up, break market structure. So what are you supposed to do? Go to lower time frame so that you can identify. Let me show you something, guys. In this 4 hours time frame, are you able to identify your inducement along the impulse? No, you are not able to see it because you are in a higher time frame. Okay, but you could see you have broken market structure with a strong push to the upside. That is the significance. That is the definition of an impulse. An impulse must be strong enough to break market structure. Okay, so as long as that is over, you need to identify an inducement right here. We don't know where it is right here, but if you don't get that inducement, you will not have idea of where these things will pull back, these pullbacks will come to. So let's go to 1 hour time frame. Can you see? Brilliant, brilliant. We can identify our inducement. This is break of market structure. This is our inducement. We are not expecting the market to come far below this inducement level. We just expect the retracement to come to discounted level. And apart from coming to discounted level, it must come to where? It must take that inducement. Okay? Can you see? Inducement. This is our discounted level. Remove your fib, guys. Remove your fib. And where's the inducement level? Right here. Where's the market pulling back to? Right here. Can you see? It does not take it, but it got there. It got in the zone. That is what you want to see. And then after that, you want a 15 minutes time frame push and correction. You see the push? You see the push away? You see the correction? That is your entry. Is it different from what we have been doing since? No, it's the same process. It's the same process. Same process, guys. Go back to 1 hour and project your target. If you are conservative, here, that's your target. You are a conservative trader. If you are a greedy one, you know that since you broke market structure here, this impulse is valid. Since this correction take inducement, this correction is valid, and therefore this will make a higher high. Boom, a higher high. And if I were you, I will also calculate that this is a lot of inducement sitting next to each other. And apart from this trend line liquidity right here, you have what is called equal high liquidity. Gold must come to take this equal high liquidity before resting. All right, this will have been your setup. Okay, of course, you know, some of these trades I take, some of them will have played out before I got to see them. So, but anyone I see before it play out, I take and I make my money. Can you see the setup on gold? The setup from the higher time frame down to 15 time frame is the same process that I have been showing you. Can we do another one? Oh yes, we can, guys. We can, guys. So without even going through higher time frame analysis for this one, you see right here, you have break of market structure. What confirmed this as an impulse, guys? Because we make a move and we broke market structure. And let's say before we even do that one, let's look at this one. Look at this move from downside here to upside. Okay, so it's an impulse. Why is it an impulse, guys? Break of market structure. Okay, and as it broke market structure, guys, where are the inducements before the break of market structure? Right here is an inducement, right here is an inducement, right here is an inducement. But usually when you take the first inducement, you are comfortable to move to the upside. This is the and that first inducement is the most important inducement, except if it does not come to the discount level. Okay, so right now this is an inducement and it does not come to the discount level, but I will show you something. As soon as it came here and you have this powerful move to the downside that took that inducement level, you are not supposed to look for a buy opportunity except if there is a break of market structure right here. Simple. And right here, there is a break of market structure, and that tells you that this move to the downside is not important. And that tells you that this first inducement right here are the most important one for us to consider. So because of the way this market turned, I did not capitalize on the opportunity to take this trade. But in the process, I was able to identify this inducement, and then you had break of market structure right here. You have inducement right here. So I waited patiently to see this market coming back to a discounted zone. And if you look at it very well, right here, you have a discounted zone. Right here, discounted zone. Okay, now you need to look at liquidity. How did liquidity come to take that level? Look at it here. This is the level we are coming to. This is the zone. This is the zone we want to tap. This is the zone. Correct. That's our inducement. Right now, you have this liquidity. You see this equal low. Okay. What you want to do when you are seeing an equal low sitting on top, you're having an equal low sitting on top of your inducement, is an indication that that inducement is going to be taken with a powerful move to the downside in this case. And what do you see? Many people were buying here. Okay, many people were buying here. But if you understand the powerful trading logic and tactic I'm teaching you, you are not going to get involved here. Why? Because you have a level of inducement here that have not been touched. Can you see? As soon as the market comes to take this level, what happens? Shot up to the upside, break market structure. And what is the rule? As soon as market structure is broken, look for 50%. You don't need to come to 78. 50% is okay. Look at it here. And that should have been your entry. Boom, to the upside. Stop loss here, projection to the upside. Can you see? Projection to the upside. Can you see? It's as simple as that. Now, let me show you something. I told you for a move to qualify as a break of, as an impulse, there must be a break of structure. Look at a break of structure here. Qualify as an impulse. Correct. Okay, correct. Where is the inducement that led to the break of structure? Right here. So where is the correction that came down? Right here. Does it take the inducement? No. So this buy will have been a fake buy. It's not valid. What do I say? It's not valid. Why? Because there was no the inducement that created a break of market structure was not taken before the move to the upside. Therefore, this will have been a single wave. This is a single wave. Your wave did not terminate here because this pullback was just a small resting. It did not come to take this inducement. So if you are taking your fib to determine the next corrective structure that you should expect right now, your fib will be from this level right here to this level on top right here. And so you have to find your inducement level from here, right here, boom. So another thing is, this is not your break of structure, guys. Your break of structure was here. So where's the inducement level that led to the break of structure? Where's the inducement level that led to the break of structure? Right here. Right here. So what we are expecting is for this market to come and take the level of inducement. Let it come. Let it come. Some people will buy here. It will give you a little buy and to make you smile, but all at a sudden, it's going to come down. Because I'm teaching you the concept of inducement today that is associated with impulsive move that break market structure, you will know that this level, it has become a fake level. This is a level that is created for support and resistance trader. But this level will be taken to the downside. Take this inducement level, and as soon as it come here, you are going to get a confirmation that this inducement has been taken, and that confirmation is a push, a sudden push down and a sudden push up, probably to break market structure. Any correction to 50%, guys, is your trade entry to the upside. Boom. Oh yes. Boom. That's how it is, guys. That's how it is. It can't get simpler than this. And you have to continue to repeat this process on and on, on and on, on and on. And as you are refining the process, you get better and better and better. It took some of us research of several years to come to that conclusion, to understand market behavior, you know, and understand what we need to do at the right time. Right now, there's no setup in the market, okay, because market is consolidating. And you don't find out that when market is pushing, when a particular pair is pushing, all other setup too will be pushing. All right, all other pairs will be pushing. It's because some of the time inducement has not been taken, and if inducement is not taken, there's not going to be a valid buy or a valid sell in the market. Can we still do another example? Probably. Let's just look at GJ. Let's look at GJ, and I will just use that to prove to you that this is a concept that is well researched. This is a concept that works perfectly. You know, I'm not going to go through the higher time frame, but I will show you the lower time frame and explain to you reason why you should take the system seriously. All right, this is what I teach, guys, in my mentorship class. If you're interested in my mentorship, I'm very much available for you. I'm ready to coach as many that want it at an affordable rate. I can tell you the system I teach, the process I follow is well researched, and once it happens and you see the footprint in the market, it plays exactly as stipulated. I'm still going to repeat the same process on GBP JPY, GBP USD rather, and you are going to see how the entry will magnet it based on the process. You are going to see it right away. Look at it. Okay, we're not analyzing from higher time frame, but we want to see how lower time frame, you know, agree with the system I've created that I'm explaining to you. Right now, look at it here. Look at it here. Okay, you have a break of market structure on the lower time frame right here, but on the higher time frame right here. Okay, so now you need to find out where is your inducement as you broke market structure. You need to find out where's your inducement. Where is your inducement? Where's your inducement, guys? This is your inducement. I told you the pullback before the break of market structure is your inducement. This is your inducement too. Okay, this is your inducement 2. Okay, if those two are your inducement, let's go to 4 hours. I'm not comfortable with this 1 hour. Aha, better. You can see the chart better now. So what you need to do, this is the impulse. The impulse starts here, it ends here. You need to take a fib of this impulse, guys, and determine your discount level. This is your discount level, guys. Boom. As soon as this discount level is determined, guys, the next thing you need to find out, where are the inducement levels? See one here, see one here, okay? This one is lying just above the discount. This one lies in equilibrium, guys. This one lies in equilibrium. You don't want to take this. You want this to be taken to the downside and pull into the position of discounted region before you can look for a buy opportunity. Right here, we know that this inducement, for it to be taken, this pullback will have been too much. All right. So if that is the case, we will be happy to see an inducement happening right at equilibrium level. Okay, look at it. This inducement lies at equilibrium level. So we would like to break it to the low. Boom. Can you see? The inducement is taken. Inducement is taken. Okay. In my training, you will also learn what is called an imbalance. So when an inducement is taken to the downside and you feel partially or wholly an imbalance candle, you need to have a move, a rapid move to the upside to break market structure. That is what you see here. You see imbalance right here. You see inducement right here. You see market came, broke that inducement to the upside. Impulse, correct. Correction, correct. Inducement, correct. Imbalance, correct. Discount, correct. You need a break of market structure. Here you see it, break of market structure. What did I tell you about the process, guys? I say anytime you have a break of market structure, you need to come to 50%. Okay, look at it here. 50% is enough. And on 50%, it created what? A liquidity zone. This liquidity zone must be taken to the downside. This is a level that is created for support and resistance trader. They are going to take a trade here, make them happy. Oh, this market is sweet. Just within 2 minutes, 1 hour, I have made 122 pips. But all at a sudden, guys, this thing moved to the downside because there is an inducement right here, guys. Look at it. Look at it. Let me show you. You see it? 1 hour. For you to see your inducement very well, you need to go to 1 hour time frame. Look at it. Boom, break of market structure. Where's the inducement? Right here. Correction came here. We are not buying. We are not buying. Boom. Why? It didn't come to discount. It came here right at this level. Why? We are not buying because this is equal low. Liquidity reside below. You move here. This belongs to the support and resistance trader. Boom, to the downside. We are targeting our inducement. Come to this level. What happened? Inducement is taken. And once inducement is taken, you need a rapid move in the opposite direction to break market structure. Look at the move. Boom, to break market structure. This is the one you are going to take with 50%. Just 50%. But if it were me, I was going to take it. All right. But with a bigger stop loss. That's one thing. Because if you are going to take this one, though it did not come to 50%, remain little. But this is a particular one that is to make a continuation push to the upside. So we don't expect a bigger retracement for it. My stop loss will have been here and then continuation to the upside. Where is it? Where did it? We expect it to break market structure right here. Market structure taken. Okay, and then market structure taken. And after market structure is taken, you need to find out where's your inducement, guys. Inducement right here, inducement right here. Then you take a fib, inducement right here, market structure broken here, inducement right here. So when you take a fib from this level to this, assuming this is the end of the impulse, then you need to find out where is your discount. Follow the process. This is your discount between 50 to 78 right here is your discount. Okay, where's the inducement? Right here is the inducement along the direction of the impulse. Then you need this market to correct, build up liquidity right here, break down here to take this inducement level, flash up, correct to 50, boom, to upside. It's as simple as that, guys. This is a process. It's a process you need to follow. If you don't see this, don't trade. If you don't see this, don't trade. If you don't see this, don't trade. And when you come to my mentorship program, I'm going to teach you where you should blindly expect your TP to hit without missing it. Without missing it, I'm going to tell you how we arrive at minus 62%, minus 27%, and why market must touch this level. Okay, and why market must react at this level. I'm going to teach you some of those stuff, guys. These are the things that make up a successful trading, guys. You know, you can have a test of some of this stuff, guys. You can have a test. For instance, this is the impulse we're considering from here. This is the impulse we're considering from here. Can you see? And then you see this level 62. Between this level and this level, GBP USD will hit it before turning back. All right, to hit it. Okay, we can go to refine it. Okay, we can go to refine it. How do we refine it, guys? Okay, how do we refine it? Just a minute, guys. Okay, we can test the same thing with this right here. Okay, you have your conservative target right here. How did you come about minus 62? How did you come about minus 27? What should you expect at minus 27? There must be a pullback. There must be a reaction, guys. And what do you see here at 27? What do you see? What do you see? What do you see? What do you see? There is a reaction. That is the first TP, guys. That's first TP for swing traders. Okay. The next TP will be at minus 62. All right. All right. And if you test it, you try it for all systems, for all impulses. For all impulses, the extension of minus 27, market must react. Markets must react. So in order not to give away your profit, you tap it, boom, take the first TP there. Then expect the next one to be the next TP. So this is how you essentially go about, you know, your trading in a very simple and more relaxed manner. But I must confess to you that if you have to trade based on this system, you might not get more than 4 trades in a whole week. Sometimes I get 2, I trade 2, sometimes 3, sometimes 1. The reason why it is so is that all the peers will be making the same structure at the same time. And of course, you know that it will be practically impossible for you to trade all at the same time. And when all are gone, they now enter into correction mode and you have nothing to trade again. You just have to essentially be looking. Do you understand? So you're not going to trade too much, but the one you catch it really good. I don't know if I can still take one more example. Does anyone has any setup? Just chat me up. Let me look at it. If you have any chart you want us to take a look at, just send it to me. Send it to me. Let me analyze it for you. Right here. Okay, I will analyze it for you, give you entry, give you TP, give you everything. AUD USD. Okay, I think I sent this to my Signal channel yesterday. We closed at 50 something pips, but it has made another 100 and something pips again. That's not a problem because CPI news was released overnight and I thought it was going to make a breakdown to the downside. Okay, daily, weekly rather. Can you see what gave me confidence that AUD USD was going to make a buy this week? Look at it. That was all. The buy signal that I gave was based on this. And then daily. You need to allow daily to align with what? This one has come. Range has broken out. You need to let this one to come back on a daily time frame. As soon as this comes back on a daily time frame, Your job with daily time frame is over, essentially. It's over. It's over. Oh, you need to go to 4 hours time frame, recognize your impulse. You see the daily is over here, and daily has created an impulse that broke market structure. You know the system. You need to take this impulse to the upside. Find out the discounted zone. Where the discounted zone? Right here, guys. The market must come here. Okay, remove the fib. You have gotten what you want. Okay, I've gotten what you want. I'll remove this fib, remove this. Okay, so the next thing you must find out, according to the process, is you must find out your inducement. Look at your inducement. This is the pullback before the break of market structure. So market must come to take this inducement. Inducement taken. Impulse gotten. Higher time frame direction gotten. Correction correct. Inducement correct. Discount correct. What do we need more? You need break of market structure in 15 minutes time frame and retracement to 50%. Look at it here. Boom, boom, boom. Break of market structure, retracement to 50%. Take your trade, boom, to the upside. Is the system different? All we have been doing is the same thing. All you just need to do is to stick with it. Right now, you have a break of market structure right here. Where's the inducement? Right here. You have to come, build liquidity here, grab this one, boom, upside, correction, boom, upside. Simple. Okay, take your trade, entry right here, stop loss right here. Okay, and then upside. This is how you look at it, guys. This is how you look at it. You know, this is how you look at it. So, with the AUD-USD continue to buy, or when will it sell? As soon as it keeps on giving you buy opportunity, buy. If it break market structure to the downside, it means that the buy is over. Will the GBP-USD sell or still buy? We cannot say to sell or to still buy. You just have to look at the structure. If you come to 4 hours time frame, for instance, anytime you see that the lowest low, this is the last low, anytime you see that it is broken, the buy is over. You have to continue to look for sell setup. Okay, that's it, guys. Essentially, we have come to the end of Wednesday Live. I see you next week, guys. I'm going to upload the video on YouTube for all of you to watch again. Thank you so much for your attention and for attending this program. I really appreciate all of you that are very regular. Ali Ames, Becky. I don't know, Becky has been very quiet in the group. I see you in the training every day, but I don't know you and you don't talk. Ima, thank you for coming. Kelechi, Nkem seem to be a new person in the group. Are you a new person? You are welcome to the group. Is Nkem a new person? Yes, I think so. Then Osijaye Ogbenerona, you are a new person. You are welcome to Wednesday Live. Paul Nati is a new person too. You are welcome to Wednesday Live. This person is not a new person. Solomon Alele, you are not a new person. All right, so thank you all for coming. Somebody said, I enjoyed this session. God bless you. Thank you very much. Thank you very much. That's how we do it every time. All right, see you next time. God bless you. Bye-bye.
Thank you, sir.